Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Here we are again, logged into thinkorswim's trading platform. We're logged into our paper trading account. We're looking at how the BITO trades executed over this week and how they played out. BITO is the Bitcoin ETF. So what we need to do is go over to the account statement, look at the past orders. Let's see, we're looking 9 days back. So yeah, we already had a covered call set, so we just needed to execute a cash secured put. So you can see that right here. Let me get some more information on the board here, and we only need to go back 7 days. Yep, and let's filter this. Let's add that. So I'll just add back the cash daily balances just to get a little bit more on the screen, so we can isolate this one cash secured put more easily. Okay, so we have this one transaction, and so it was a $19 cash secured put. 19 was the strike price, and let's jump over to, well, we can see it right here. So let's go to BITO. So yeah, the last trading price is $20.69, so we did not get assigned, so we basically, this expired out of the money, so we basically, it expired worthless. All right, so we need to jump over to the web application to track this transaction. Let's do that right now. All right, here we are logged into the website, myatmm.com. We're setting on the dashboard. We need to jump over to the cost basis page, make sure BITO's selected, and we need to get the thinkorswim transactions up on the screen. There we go, and let's adjust this so we can see it better. There we go. All right, we need to, there was the existing covered call, and it expired this past Friday. The strike was 25, so it expired out of the money, so we can go ahead and get rid of that one. And we need to put a new position on the board. The transaction date, as per thinkorswim, is August 19th. So change that right there. It's a sell to open. It was a put. We did one contract. The expiration August 23rd is past Friday. The strike we had on that was 19, and we got 44 cents for it. So click save there. It goes to the puts group, and it has this proposed record. The commissions per thinkorswim 65 cents. The fees was 2 cents. So let's click the helper button to move it down, pre-calculate that for us, and then click save to retain it to the permanent transaction history. And there we go. So this cash secured put expired worthless, so we can go ahead and clear that off the board. So here we are, setting no puts, no calls currently in play. And our overall summary is we own 1,100 shares. The unrealized loss is $61.91. All the credits and premiums we've collected this entire time are close to $3,000. Our cost basis is currently sitting at $26.32. The last trading price is $20.69. Our cost basis with premium is $23.59. All right, so what we need to do right now is go look for 11 contracts of covered calls that we can sell, and we want to go ahead and run another cash secured put. So let's go back over to thinkorswim and look for those right now. Here we are back at thinkorswim's trading platform. We need to get the cost basis up on the screen. There we go. All right, we want to jump over to the Analyze tab. Let's go ahead and expand this back out, collapse that, get the chart up there so we can look at that. All right, so our cost basis is setting at what? $26.32. All right, so we need to see what premiums are available for $26.32. And something that I do like to do is go ahead and just filter so we can get more information on the screen for the range that we're looking for. So let's just do, we'll do 25 to 26.50. All right. So there are no 20. Okay, there's a 26.50 there and there. Okay. But not there. So let's change that to 27. See if we can get a little bit more information. All right, so the upcoming week, the upcoming expiration on August 30th. And something to note about BITO is BITO's dividend date is like September. It's like the first of the month. So if you own the stock before the first of the month, then you qualify for the dividend payouts, which the dividend payouts recently have been quite a bit. Like we're talking $1.50 a share, so they're quite significant. But we're in the paper trading account, so it's actually not going to pay that. However, I will say it generally sometimes prices it in to the premiums that are selling. We won't really see it here necessarily because we're so far out of the money because it's currently trading at 20.69 and we're looking to do a covered call at our cost basis is 26.32. So ideally we want to be at 26.50. Since we've collected so much premium, we could probably get away with going for $26. If it was to actually go there within the time frame that we pick, then we'd be out like 32 cents per share. But we've collected so much premium. I mean, we're only talking $32 per contract. All right. So this coming Friday, the 26 is only worth pretty much nothing, and the 27 is worth nothing. So we're gonna have to go out a little bit further, which I actually do want to go out a few more weeks, probably 3 weeks. I don't know. I might even shoot for the monthly, depending on what the premiums are that we're gonna pull, because I got some things coming up, and that's the great thing about this strategy. You can always push it out several weeks if you got something going on. Don't want to watch it. You can always buy in some time that way. Will you lose a little bit of money? Maybe. You might lose a little bit of money. And the loss in money is actually not a loss in money. It's just a loss in premium you can sell for. So you just won't make as much as you probably could have. All right. So to be safe, there is no 26.50 there, 26.50 here, but yeah, the premiums are all over the place. So these are probably not very accurate because it usually should be a digression like 10, 8, 7, 6, 5. It should go down, and they're all over the place. Yeah, it's jumping up right here. So these are not very accurate premiums. You have to wait till the market opens for that to correct itself. And see, especially like here, $1.94, that is not accurate at all. So I'm just trying to get a feel for the premiums, and they're jumping all over the place, so it's really hard to tell. I'm going to have to probably expand this out to 20s so we can see what's going on here. All right, so see 45.29, so it should go down like that, 11, 8, 6, 4. So these are probably on the outskirts of being accurate, and then anything below that is completely not accurate. That's the 16 is false. That's not accurate at all. So let's just get rid of this week. We're not going to do that week at all. 55. So I'm just trying to look for something because we're setting at the cost basis is 26. So a target of 26. See, this is not accurate because it goes 8, 5, 6, and then jumps up to 26. That's not accurate. So it's going to be less than a 6 here to keep on going. So this isn't good either. So we'll go and collapse that one again. We'll go out 3 weeks. It's 26. Yep, see, that's way out of range. But we can kind of infer what it should be because we got 92 going down, 35, 23. Okay, these are not accurate. 21. So this 26 is probably setting around 13 cents. 12 cents, 13 cents, something like that. The 75 is definitely not accurate. So we could probably pull maybe 10 cents, maybe, because look at all these bids. They start off 0 right here, so still not very accurate. We'd have to just put out an offer and see if it executed and adjusted accordingly until it filled. So I'm still not really digging that one either. Let's go ahead and go out to the monthlies. So we're setting at 26 or 27. Let's see how these are going. Now this is interesting to note. If we come back here, the 21s, see 21, look at this. 21, you can get 92 cents here and only 77 cents there. Yeah, these are completely messed up, apparently. So it looks like we're going to just have to take a shot in the dark, put out an offer and see if it actually fires. And I'll tell you this much. Running a monthly for 12 cents, I mean, we wouldn't get 12, we'd probably only get the 8 cents, but running 26 days out for 8 cents, and I'll tell you another thing right here. See how we're kind of starting to try and go into an uptrend? So it'd be pretty, I don't know, embarrassing, not embarrassing, but it would definitely be a bummer to see this thing keep on going up, because as the price keeps on going up, the price in the premium is going to go up too. So if we were to sell this, say at 8 cents for 26 target, and the price of BITO was to keep on going up, well, we would have bought it or sold it at 8 cents, but by the time it got up to us, it'd be worth like 45 cents. And, you know, it's just kind of insulting. So what I like to do instead is to just sit on this and wait to see what the stock does. Because if the stock keeps on going up, then it actually makes more sense to just wait a few days, maybe even wait a week before you actually sold another covered call on it, because you can get a lot more premium for it. So what we're going to do is we're going to sit on BITO and wait for it to go to see what it does, see if the stock goes up. If the stock just starts going back down again, then we can go ahead and look to sell this monthly at the 10 or 8 cents or whatever. It might only be worth 6 or 5 cents by then, but we can look to see if we want to do that at that time. But if it keeps on going up, I would rather just sit and wait and see how high it goes, because the closer it gets to our $26 or $27 price range, this premium will keep on going up. When it gets to be, you know, enough that you're comfortable with, like at 30 cents, 45 cents, you know, something like that per share, then go ahead and sell a covered call on, and then you can start collecting a lot more premium on it that way. Because down here, we're just kind of throwing darts in the dark kind of thing. Can I even get a penny in the next 5 days? That's a good question right here. So, setting at $26, I'm going to go ahead and take a shot in the dark. I don't even know if this thing will fill, but, you know, in 5 days, will it jump up to 26? Not likely. I mean, can it? Sure, it could jump way up there, but chances are low that it'll do that in 5 days. And if I can go ahead and collect a penny or two on it in the meantime, then yeah, sure, let's go ahead and do it. So I'm going to go ahead and put a queuing order out there. It may not fill, but 0 to 3 cents should be 1.5. I'm going to set it at 2 cents just to see. And we have 1,100, so we can do 11 contracts. We'll right click here, confirm and send, and see, we're only going to collect $14.85. Not much, but it's something. It's better than nothing. We'll go ahead and put that out there, and if it executes, cool. If it doesn't, then we might jump down to a penny and see if we can get a penny. If we can get a penny, then that's cool in 5 days. Again, the likelihood of jumping up to 26 in 5 days is really low. But, yeah, so we'll just play that out there. And then if it does, in fact, go up this week, like say it makes some move. I mean, these are some big jumps here. So just extrapolate that out. If it did a similar move up to here in just a couple days, it could reach up to 24s up here. I mean, it'd have to jump way up to get to the 26, but, you know, anything's possible in the stock market. But if it does jump up to 24, then yeah, we kind of lost out a little bit in premium here, but it's only in 5 days. And then you turn around the next week, and the premiums are going to be like these 45 cents, 29 cents, juicy premiums, so that'll be really nice to get at that time. Again, we'll just have to wait and see if the stock keeps on going up in this little uptrend it started to form, or if it just falls back down. And if it does, then we still collected a penny or two, and we'll just keep on doing a penny or two for the next 5 days, because there's only so far a stock will move in 5 days. All right, what we need to do now is we need to look for that cash secured put. So we need to clear the filters, and we need to set it back to 4 so we can see at the monies. All right. Okay, so see, look, here's where I was telling you the premium was probably priced in for the dividend that we will not be getting selling cash secured puts, because look, the expiration right here is this Friday, or this coming Friday. It's only worth 38 cents. But if you cross over to the next week, to the new month, where the dividend will get paid out on September 1st, or it doesn't get paid out on the 1st, but the ex-dividend date is September 1st. And that's when you'll qualify for it if you own the stock at that time. So you can see $1.11. See how it jumps up so much in premium? That's because it's priced the dividend in. All right. What we need to do is I'm going to go ahead and do one of these. And the midpoint between the bid and ask is 140. So we will bump this up to 40. 140 total. We're only going to do one cash secured put contract. We'll right click on here, click confirm and send, and then send that off. So it's queued too. So now we'll just wait and see what happens tomorrow morning when the market opens. And I pretty much expect that this cash secured put will fire off, assuming that mid-range price is accurate. We'll adjust it if it isn't, and we'll just watch to see if this covered call executes or not. The funny thing about it is if the price does keep on going up, then it's probably going to execute, because that will become worth, definitely worth a penny or two, maybe even more. So we'll just have to wait and see where this stock goes, and we will review it. Depending on if this covered call executes, I may not review it next week. I may actually wait till the following Friday. Like I said, I do have some things coming up, but I think we'll probably skip next week. But this week, the following week, where this cash secured put is firing, we'll definitely probably review then and go over what happened and see what direction BITO goes. And so, until then, I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.